Let me turn away from two-wheelers now into real estate. Godrej Properties has had a very good quarter. In fact, that's been a stock which has been outperforming for the last few weeks, now at 611. Pirojsha Godrej, Managing Director of Godrej Properties, joins me now to take us through the numbers. Pirojsha, good morning. Thanks for joining in. There's a lot of excitement about Godrej Summit and how well that's done for you. Just take us through the numbers, what kind of realizations you managed from that, and what your expectations are from the Gurgaon market in general.
Great to be with you, Udyan. I think we did have a positive quarter in Q2, and as you rightly pointed out, I think Godrej Summit was a key part of that success. As has been reported, we sold about 1 million square feet, or almost 700 apartments in that project in a single day, and that led to a booking value of about 600 crores for the company. So that certainly drove our overall booking figure, which ended the quarter at 965 crore, which was about a 330% increase on a year-on-year basis. We also had strong growth in revenues, which grew about 64% to 233 crore. Our EBITDA grew by more than 100% to 72 crore, and our net profit ended at 33 crore, which was about a 68% increase. All of those numbers, of course, don't factor in the Godrej Summit numbers because of the percentage completion accounting method which we follow. The Godrej Summit and other new launches that we've had, those numbers will only start coming in to the revenue stream over the next few quarters.
What kind of average rates are you selling at in Gurgaon?
In Gurgaon, for the second quarter, we ended at an average rate just a shade under 6,000 rupees a square foot. We'll be launching within the second phase of that project in the next few days. And we do expect to launch that at a substantial premium given the strong success of the first one. And on this second phase, I think the goal will not be so much to try and replicate our success with volumes, but rather make sure we push for good, strong pricing to further improve the already strong margins on the project.
On hindsight, should you have priced Summit a bit higher at the way it flew off the shelf?
You know, it's a great question, and our honest answer is no. I mean, we certainly feel we could have probably sold at a slightly higher price. But at the same time, you know, this price was already much higher than we expected to sell at just a few weeks before we launched. We took a price revision even within that one day, and we're quite happy with the price we received. Of course, you know, I think given the response, we could have probably even sold well at a slightly higher price, but I think it was more important for us to achieve the kind of volumes we have at very good pricing. And I do think that our general philosophy is to focus quite a lot on volumes and make sure that we are successful in creating those volumes, because I think pricing will always follow once a project is successful. And keep in mind that it's a 2 million square foot project, so we only sold half the project in the first phase. And I think, as I mentioned, the strategy on the remainder of the project will be, now that we have this very strong base in place, to focus almost entirely on margins.
How's the Bangalore market shaping up for you, with specific reference to your Gold County project?
Well, then we've had two launches in Bangalore over the last month. Both have done very well. Gold County, the project you mentioned, is a villa project. It's a high-end project. That has done quite well. We've sold about sort of a little over 40% of the launched inventory. What has, however, been an even greater success is our project Godrej E-City, which is an apartment complex in the Electronic City area of Bangalore. And there again, we've had outstanding volumes with about 250,000 square feet sold in the just under a month since that project has been launched. So I think the Bangalore market is looking good for us, as is the NCR market. And of course, our Mumbai market, which is a very important one for us, has also been looking good. We launched the third phase of our project in Vikhroli, Godrej Platinum, on Dussehra a little over a week ago. And we've seen great responses there. We're selling now at prices that are about 30 to 35% higher than the price we launched the first phase at almost exactly a year ago. And there too, we've seen great volumes, with almost 50% of the inventory in that phase sold within 1 week.
More than just over half your revenues for the quarter came in from Godrej 1. Two-part question on that. A, will you exhaust your entire inventory on Godrej 1 within this fiscal year? And B, as you go into FY14 then, do you still expect to clock the kind of margins that you're clocking now if Godrej 1 is exhausted by then?
Well, then I think we will recognize additional revenue from Godrej 1 this fiscal year. I don't expect it to be entirely depleted by the end of this financial year, but certainly I think this financial year will see more revenues coming from Godrej 1 than next financial year will. I think our margins have been a little bit under pressure on some of our projects, particularly commercial projects in Tier 2 cities and some of our middle-income residential projects because of the huge uptick we've seen in construction costs over the last couple of years. With those construction costs now plateauing and with new launches coming up at higher price points, we're quite confident that next year the margin profile on all our other projects will be higher. Also keep in mind that Godrej 1 is a 750,000 square foot project of what is a total of about 3.7 million square feet that we expect to develop in this Vikhroli project. We expect the remainder of the project to be as high margin as Godrej 1, and we hope to start work on the remainder of that project next year. So I think the Trees, which is the project of which Godrej 1 is a part, is a project that will be contributing to our revenue for the next 4 or 5 years at least. So I do expect that strong margins from that project to benefit us for the next few years.
How quickly can you bring down debt on your balance sheet, Pirojsha? As cash flows remain strong through the next few quarters, have you set any targets or way to bring down your overall gearing by? Because that's probably an area of mild concern for analysts who track your company.
Well, then I think we've had a slightly divergent view from some of those analysts on this metric. We think we're at quite a comfortable level. Our current gearing level is just over 1:1. Just to put that in perspective, we ended Q3 of last financial year with a gearing level of 2:1. Our absolute net debt is also decreased by almost 400 crores. So we feel fairly good about where things are currently. That said, our focus from a strategic perspective is going to be more and more on residential real estate. And we do think that will allow us to operate at a more efficient debt level. And we do feel that as we're able to unlock some of these Tier 2 city commercial projects that we have, which has been, I must admit, a more time-consuming affair than we would have liked, and as we start further monetizing Godrej 1 in Vikhroli, and as we launch Godrej BKC, our important project in Bandra Kurla complex, which we hope to launch this quarter, we do expect to be able to reduce our gearing levels further. But I wouldn't say that that is a key focus or that we have some particular target in mind for that. We already feel our gearing levels are at reasonable levels. And I think what some of these metrics miss is things like our Vikhroli project, which gives the company a huge flow of cash flows over many years, and for which we don't have to invest in the construction. So something like that isn't fully captured in a gearing ratio, but will create thousands of crores of cash flow for the company, of course, over an extended period of time.
Good luck, Pirojsha. Thanks very much for your time today. Good talking to you. That's Godrej Properties up 2.25% today, so has got a good response yesterday included from the results. To the commodity space then, where